Open your cerebral cortex and shift your lobes into upper beta phase, because you are going to have Bitcoin knowledge transmitted directly into your vestibulocochlear. Your host at Bitcoin Knowledge is Trace Mayer, an early Bitcoin advocate since it cost $0.25, but this is not intended to be investment advice. A doctor of jurisprudence, but this is definitely not legal advice. And an investor in core cryptocurrency infrastructure, including Armory, BitPay, Kraken, and Nitagio, but this is not a recommendation of those services. Here, you get fed via direct mind download with pure and free Bitcoin knowledge.
What's up, everyone? This is Anthony Pompliano. Most of you know me as Pomp. You're listening to Off the Chain, simply the best podcast in crypto. Let's kick this thing off.
Trace Mayer is a true Bitcoin OG. He was buying Bitcoin in 2011 and is the hodler of last resort. In this conversation, we discuss the early days of Bitcoin, how Trace built his initial conviction, where the asset is today, what Trace thinks are the most important things to watch, and where we are headed next. This is a can't-miss episode, so I highly recommend listening.
Skirt, skirt. Want to know who has the best URL? Crypto.com. That's right, Crypto.com. They're a crypto platform with one goal: motherfucking mass adoption. That's why we're all here. We're trying to get crypto in every wallet. Crypto.com is helping people do that through buying, earning, lending, and card payment. Everything you could want at Crypto.com. Go help your boy out. Tell him Pomp sent you. Download the app or visit Crypto.com. Pomp's got you, always. Ever wanted to get into mining and didn't know how? Don't worry, your boy Pomp's got you. Everybody got some electricity and Wi-Fi. All you got to do is go to coinmine.com. You buy a coin mine. It's like an Xbox or a PlayStation that helps you turn your electricity into Bitcoin. That's right. You purchase it. It shows up at your doorstep. You pull it out of the box. You plug it in, connect to your Wi-Fi. 5 minutes or less, you're mining Bitcoin. All you have to do is control it from the mobile app they provide, and then you receive over-the-air updates that add new coins and new features on a consistent basis. Kind of like how Tesla does over-the-air updates and updates the car software. Just you're updating your coin mine. Consumer mining made easy. That's right. Go to coinmine.com, tell them Pomp sent you, and thank me later.
As many of you know, crypto investors store their digital assets on exchanges or in cold storage for long-term safekeeping. However, this strategy doesn't help them grow their investment holdings or build overall wealth. With the new BlockFi interest account, users can now securely store their Bitcoin or Ether at BlockFi and receive 6% annual interest paid monthly in cryptocurrency. 6% is an absurdly high rate. It's the best rate in the industry. I highly suggest you go check out blockfi.com/pomp. Again, that's blockfi.com/pomp to sign up and start earning crypto today.
If you follow Bitcoin and crypto, you've probably heard of eToro. They're the world's #1 social trading platform, and I love it. They've got more than 10 million other traders that love it too. And guess what? They just launched in the United States. eToro offers access to the world's most popular cryptocurrencies, including Bitcoin, Ethereum, and others. With the smartest trading tools and the ability to connect with the best traders around the world, there's no better place to build your perfect portfolio. If you're new to Bitcoin and crypto, you can test the waters with their $100,000 virtual trading feature. But if you're more experienced, you can create custom technical charts and use eToro's social feeds to inform your trading decisions. They've got transparent fees, and so you never miss out. They also have an easy-to-use application available on iPhone, Android, or any web browser. You can get started today in just a few clicks at eToro.com. Again, that's eToro.com. Get VIP access to Bitcoin and crypto markets today.
Anthony Pompliano is a partner at Morgan Creek Digital. All opinions expressed by Pomp or his guests on this podcast are solely their opinions and do not reflect the opinions of Morgan Creek Digital or Morgan Creek Capital Management. You should not treat any opinion expressed by Pomp as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. This podcast is for informational purposes only.
All right, guys, bang, bang. I'm here with probably one of the people I've most looked forward to having you guys listen to, Mr. Trace Meyer. Thanks so much for doing this.
Yeah, thanks for having me. This is going to be fun.
So Trace and I talked a ton, and he's got a bunch of really powerful ideas and just been around the Bitcoin space for a long time. So let's start from day one. What were you doing before you ever heard of Bitcoin?
Yeah, so I had written a paper on money and currency in American law in law school, so a very deep academic paper. So I got a good philosophical foundation. Then I started reading Mises and Rothbard and Dr. Vieira, all this type of stuff. So I got a good foundation in Austrian economics. Then I took a course in Mises Academy on network effects in the digital age. This was before Bitcoin even came out. So I mean, people are like, oh, people just got lucky like buying Bitcoin. It's like, no, man.
No.
You didn't just get lucky like buying Bitcoin, and you definitely didn't get lucky hodling it.
Yeah.
Right.
Well, I always say that there's some people who got lucky in the sense that they were, early in video gaming, or they were doing nefarious things, and they were just looking for a currency,
right.
And then they usually forgot they had it, and then it ended up being
or they spent it.
Or they spent it. You specifically were focused on money. You saw it. Right? We'll get into kind of how you saw it and what you did, but you not only have held, but you've continued to buy.
Oh,
right?
Yeah.
And so the conviction level is off the charts. Right?
Oh, yeah, for me. I mean, I coined the term on Pierre's podcast, Noted. Hodler of last resort, man. For real.
Yeah,
that's me.
So, all right. So you're studying kind of money, economics, finance, et cetera. And then when do you first? Let's talk about the gold.
When I've been in digital currency in the mid '90s, in high school and mid-late '90s, and played around with eGold, played around with encryption, played around with Napster and Kazaa and LimeWire and all. So I mean, this confluence of all these things. I developed the human capital. The most important thing you can do is invest in yourself. What's the return going to be on that? Education's the key to opportunity. And a lot of people, they just don't invest in themselves. They don't have that time preference. They don't have the curiosity. And so, luck is when that preparation meets opportunity. And so I had done that, I instead of dinking around watching TV, I was reading Mises. I didn't get lucky. People in this and especially having the conviction to hodl. I didn't get shaked out by Jihan and his Bcash thing. I mean, I just swiped a bunch of his Bitcoins.
Yep.
Lots of them.
Yep.
And so, this is how this game is played. We're at war taking territory on the Bitcoin blockchain, measured in Satoshis.
And so as you were doing the self-study, really educating yourself, both on technology and then on money and finance, there was a point in time where you were one of the probably more prominent voices around gold. Right.
Oh, yeah.
Maybe talk a little bit about what you were doing there and kind of what the thesis was.
Yeah. So because I'd written that paper, I'd always been interested in the money, and then I learned the philosophy behind sound money and its role in politics and political philosophy and everything. And that whole time, I mean, I was trading. I was trading stocks in high school, and I was trading derivatives in college and law school. I'm trading futures, and I'm trading puts and calls, and I mean, freaking crushed it on the Google IPO because I bought calls, and then it did the S curve, and I layered in on the calls, and so those. I mean, I made 120x on my Google investment in 6 weeks, because I'd played the derivatives right.
Yep.
And I really like the derivatives because you can with laser precision, hedge out your different risk. So, I was very sophisticated in a lot of this stuff. And then I ran into GATA, and Dr. Vieira, went and had breakfast with him at the GATA conference in DC. And, if you're not familiar with the gold price suppression scheme and the work of GATA, GATA.org, the Gold Antitrust Action Committee, you just don't understand how the world works. You just don't.
And what's the website? GATA?
GATA, GATA.org. And, because the central banks, they hold gold in the vault and gold out on loan as the same line item. They're reporting cash accounts receivable as the same thing. We're talking about something that they can't print. They only have a half to a third of the physical gold they claim to have, that based on forensic accounting of their financial statements. And this was in the mid 2000s,
which probably has gotten worse.
And it's gotten worse. Some central banks are starting to buy more gold now, but I mean, gold's the locus of the financial world. And I mean, like, and they want to, it's very odd. If you own a lot of something, why run a cartel to suppress the price? And it's because the price of a portfolio asset is irrelevant compared to your power to issue what we use as currency.
Yep.
And so, they're propping up their fiat paper franchises, and it's just, so that whole area was huge, and so I'd started Run to Gold in 2008.
What was that?
Runtogold.com, just a blog. I'd write about monetary and economic stuff. And then the first week of 2009, I published my book, The Great Credit Contraction, asserted that it had started. So we'd spent 500 years going from commodity money and fractional reserve banking, commodity money and full reserve banking to fractional reserve banking and fiat currencies over a great credit expansion, 500 years. And, now it's kind of reached its zenith, and economic law, it's going to come back down. Capital burrowed down the liquidity pyramid into safer, more liquid assets, which is exactly what we saw happen, and part of the reason why I think interest rates are where they're at. This is where I differ with Peter Schiff, hyperinflation. It's like, no. Capital is going to all burrow into treasuries because those are safe and liquid. And then they'll eventually evaporate into nothing through hyperinflation. But, that's going to be down the road. And only when the capital moves from them to something lower in the pyramid, which will be gold and silver at the time when I published the book, or increasingly it looks like it's going to become Bitcoin. And so, Bitcoin was a very natural fit into my thesis on the Great Credit Contraction. Coincidentally, I give an example in the book where somebody's like extinguishing a debt or a trade and using silver coin to buy pizza, which is, we have the famous pizza transaction, which happened with someone in my city I grew up in. So that's kind of fun.
I love it.
It's just fun how all these things, it's just by coincidence. So anyways, I published that book the same week Bitcoin came out. So the Great Credit Contraction has started. We had all the craziness of 08, 09. And then I also started my podcast that same week, 2009. Run to Gold podcast.
You were early.
Yeah.
Early to the podcast game.
Yeah, early to pretty much everything, right? And and so that's kind of where it's at. So then, I let Bitcoin, I learned about it, and then, of course, like let it germinate a little bit more. And then January of 2011, at about a quarter, that's when I started first publicly talking about it. And was the first popular blogger, someone who had millions of people, millions of page views and stuff like that. First person to really talk about it. I mean, otherwise it's very obscure. And then Roger Ver, he came in and started talking about it a couple months later. And then, everything's kind of off and running from there.
To describe how early you are, if you asked Saif Dean, who wrote the Bitcoin Standard, you are where he learned about Bitcoin first, right? It just these people who are interested in Austrian economics, gold, etc., they were learning from you when you were writing about it.
Yeah. So, and I specifically targeted them, because I was thinking about this. It's like, okay, if this really plays out and we have this wealth transfer, the likes of which the world's never seen, which is going to be huge, once in a species opportunity, triple entry bookkeeping, soundest, hardest money. Who do I want to have be the benefits of that? Be the benefits of that wealth transfer. And I'm like, well, I like the gold bugs because they should understand money, and the libertarians because they're just crazy. And what would the world look like if a bunch of libertarians were ultra rich? It'd just be crazy, right? Like that's going to change the political constitution of the makeup of the world. So those are the two niches that I went out and started targeting. And sure enough, some of them latched onto it, some of them didn't. It was interesting, like Lou Rockwell, he just was not interested in Bitcoin at all. Peter Schiff, Bitcoin's $8, and we're at an investment conference in Palm Springs. We have all the interview equipment out because I just finished it with the Future Money Trends guys. Peter Schiff walks by. I knew him from Ron Paul. And they're like, we start having a conversation, and they're like, hey, why don't we put this on? Record it and put it up on YouTube. And Peter Schiff's like, weaseling his way out of it. And he finally makes a statement. He's like, no, I don't want to because you'll make me look stupid. It's like, oh, so it's not about the audience and what's best for them. It's about whether you're going to keep making fees off of them, right? Yeah. So I lost a little bit of respect for him because for the most part, I mean, I've giving all my work away for free. I mean, I charged for my book when it first came out, but now it's free. I give everything away for free. I don't have any ads in my podcast or anything like that. It's like, I like to think of myself as kind of the clarion call warning people, and that was good for the first decade. Bitcoin's out there. It's not going away, not going anywhere. And so now we get to be a little bit more competitive in this next decade.
Well, so one of the things that you've told me previously that fascinates me is when you first started writing about it, it was somewhat from a bent of like, oh, we may have missed this. Right, even though it was still $1, $5, I don't know what the price was, but it had gone from 0.3 of a penny to whatever it was,
$30
to $30,
crashed to $2.
Yeah, and there was a sense that early in the community of like, oh, we all just missed this huge run from a penny to $30.
Yeah, I mean, I didn't. Not that we missed it. It's just we missed that particular run in it because. We're going to have these massive volatility, these massive types of runs because, man, people are just, it's like the dog on LSD, like chasing the rabbit. I mean, and there's no punch protection team to like moderate these prices. And if the punch protection team tries to, they're going to get wrecked. Because they can't deliver fake Bitcoins. So like
the thing that keeps the traditional market stabilized is not available here, and therefore you get the volatility. But we've been trained, I think, and educated that the volatility is bad and that the markets are bad when they're hyper volatile. But actually, it's a very natural thing.
No, it's actually a wonderful process of price discovery and allocating the different resources. And Mises even writes about this in Human Action, the evenly rotating economy, and just that's a fool's errand to try and make work. So people who want to seek safety and security and all this stuff, like no, we're sailing into a new world where we're going to have a much more there's just going to be a lot more volatility because we can't moderate the prices. Punch protection team's not going to be able to handle it. Where are they going to get the resources?
Walk me through what the thesis on Bitcoin is today, right? In terms of, so we've had it a decade, it's not going anywhere. Everything you've said so far, I pretty much agree with. How do you look at Bitcoin given the rest of the macroeconomy, some of the issues that we're seeing as warning signs in the legacy system, and then where that asset is today and how it kind of can play out over the next few years?
Yeah, I mean, we're building the replacement. Bitcoin's the lifeboat. The current system is burning. Like, how long are you going to stay on it? The losses are going to have to get realized by somebody for real. Like, there's no way to avoid the final crack of boom, and we have so much that's been hypothecated and rehypothecated. They're real and productive assets in the economy, and the combined productive ability of the economy just doesn't justify all the debt that's out there. Now we got negative yielding debt, so like the current system is totally foobarred, and Bitcoin looks to be the solution. Why? Plan B with his modeling Bitcoin scarcity, and then the co-integration that helps prove that model. I think that's very important. So now we're like, if you're managing large amounts of assets, you have to you're totally negligent if you aren't seriously considering Bitcoin in part of the portfolio.
So I started saying this probably last year, so 2018, where it was more so when my partners and I go in to go talk to these institutions, there's a tipping point, right? And I wasn't so much claiming like we were at the tipping point as much as we were getting close to the tipping point of if Bitcoin has data that shows it's a non-correlated asymmetric asset, and we understand how in putting that into a portfolio with modern portfolio theory, it has a positive impact on the portfolio, and you're aware of that, and you don't do it, there is an element of you're actually violating your fiduciary duty.
Why didn't you do it?
Well, that's where the questions come, right?
For real, like, why didn't you do it? Why'd you miss out on this?
Exactly. And I think at first, Mark Yusko, my partner who's been in the asset management business, 25, 30 years now, saying something like that is very kind of hyperbole, right? And just it was a little uncomfortable. And then as I started thinking more and more about it, now he's like, no. Actually, there's a lot of validity in that because the data is the data, right? What it promises to do is exactly what those institutional investors are supposed to be looking for.
Look at Bitcoin's Sharpe ratio. Look at it's uncorrelated. Look at Plan B's work. Where you're able to model out with 99.5% correlation the Bitcoin price based on stock to flow in days. And then you're able to prove that with co-integration.
So walk us through stock to flow. What is it and kind of how that worked, the work you did, and then what Planby's doing?
Yeah. So, I mean, because I came out of gold, and trying to value gold, especially with all this central bank interference, I honed in on stock to flow very early. And, I think there are even tweets where I put out about Bitcoin stock to flow in like 2014 and 2015. And so then Safety and wrote the Bitcoin Standard, which is totally the book I would write if I weren't lazy. He did an excellent job with that book. And I just can't praise him enough on that. Part of the reason I did a legendary series with him on my Bitcoin Knowledge podcast, 5 episodes, I highly recommend people listen to those, along with the series I did with Adam Back. And so, we got that. And then, what was it, like 6 months ago or something, Plan B came out with this.
And Plan B is somebody on Twitter.
Anonymous guy on Twitter, supposedly works at a quant fund or something. But he took what I felt intuitively when looking at the Bitcoin thesis, because I also came up with the 7 network effects of Bitcoin. Speculation, merchants, consumers, miners or security, developers, and I put in there like accountants, attorneys, regulators, financialization, things like backed, ledger X, futures, options, and then world reserve settlement currency. So that's the destiny or the potential destiny. And it's like what, and their entire industries and then companies within those industries within each of those network effects. And they all exponentially reinforce each other. The network effects do. And because I'd taken that Mises Academy course on network effects, like before Bitcoin even came out, and network effects in the digital age, I was like, oh my gosh, like Bitcoin's going to have all these network effects and blah, blah, blah. So, I mean, I just really honed in on Bitcoin and like, man, this could be a solution to the great credit contraction. Like, where do you run for protection of your standard of living? Because it's going to be much more about just protecting the capital you've got or think you've got, because a huge amount of that liquidity pyramid has to evaporate into nothing because it never existed in the first place.
Yeah. We've talked almost ad nauseum at this point on the podcast about how inflation creates a wealth inequality gap, how it eats away at the actual wealth somebody has. It steals the wealth, it inflates assets, it enriches the elite, et cetera.
And most importantly, I'd say it distorts. It's a form of economic censorship. And what this gold price suppression scheme has done is it's effectively censored interest rates, which are a vital mechanism to allocate resources in the economy and over time. And so, like, if Bitcoin really is censorship resistant, it's going to be able to withstand economic censorship, which I think is going. When that happens, now we no longer have a centrally planned global economy using fiat currencies and fractional reserve banking to carry out political means, deciding who gets different capital and who doesn't, right? And so all of this, I intuitively felt all of this and even could articulate it. And you go back and look at some of my early interviews and stuff, and I did a pretty good job with it, for 6, 7, 8 years ago. But, it was still very intuitive for me. But Plan B has just logically laid out and done a lot of the math on this stock to flow. And it's like, oh my gosh.
It's scary how accurate it is.
It's not just scary. It's so scary that he said you could go back and use only the data up through like mid 2011 and still come out with the same model. So it's been sitting there for everybody to discover, right? And then like Black-Scholes, I was listening to one of his podcasts and he's talking about Black-Scholes. The guys, it was out there publicly available for a decade before like portfolio managers decided to start using it. And so it was exploitable for that whole time. And he's like, the same thing's happening with Bitcoin. So I think the first decade was, we're all still kind of stumbling in the fog, like trying to figure out what to do with this thing. And I was, waving a hot or last resort, like just buy this stuff and hold it and hold your own keys and don't put them on Mt. Gox and blah, blah. I didn't lose a single Satoshi on Mt. Gox, because just not what I'm going to do. And proof of keys, right? Proofofkeys.com. It's coming January 3rd. You imagine global coordinated bank run on an asset that's strictly limited in amount that everybody can verify with a full node that they can run on a Raspberry Pi?
It's crazy.
And we're going to do this every year, this proof of keys? And these banks think they have a problem in the repo market right now? I mean, just wait.
All right. So on the stock to flow stuff, the accuracy is really, really scary. But describe
and it's been proven on the co-integration. So
explain what that means.
So okay, it's highly correlated. So what? It could be a spurious correlation, and we've seen all different types of charts, like the butterfly flaps its wing in Tokyo and you have an earthquake in California, and they happen at the same time, and therefore it's correlated.
It happened 3 times.
It happened 3 times, therefore it's correlated. We got ourselves a trend. So you can have spurious correlation. So in econometrics, and I don't really agree. I'm much more like a fundamental in terms of like the Austrian economic theory, but I think there's a lot that we can learn from the math, and I don't think we should run away from the math if it's hard to do. I like to first make sense of it in terms of the philosophy and the logical argument, and then I like to apply the best tools I can. Whether that's Mayer multiple or econometrics or whatever. Anyways, so they looked at the co-integration and tried to falsify the hypothesis to say it's a spurious correlation, and actually it's co-integrated. So that means that it's not a spurious correlation, that it actually is this way. So now like portfolio managers are going to have to look at this and be like, oh my gosh, so we're looking at a 6-figure Bitcoin price in 2021.
Yeah,
because the stock to flow is going to change in the number of days. And we know what the stock to flow is going to be because of the difficulty adjustment algorithm, and we know how many days there are going to be. And those are the only variables that are determining our price.
Yeah. Well, and the thing that's interesting to me is that's all with the value, right? So the way that I think of the value,
price,
right? Well,
value is subjective.
Yeah. The value meaning that is what if without human excess and greed, right? This is where the price is going to go. What I think you see though is in the euphoria when you go from $10,000 to $20,000 price points,
and that's your Mayer multiple, right?
Exactly. So explain what the Mayer multiple is.
Yeah. So first, I didn't coin it. I'm not.
Oh, really?
I'm not that way. No.
Okay.
Preston Pish from Bitcoin Investors podcast coined it.
Okay.
And then everybody's like, oh, more math, because Bitcoiners love to do math, right? we got some skills there. So basically, I ran into the problem that I figured was, with the gold price suppression scheme is if they're economically censoring the pricing mechanism, like how am I going to determine whether something's actually a good value or not? How am I going to do my economic calculation? Because they're like screwing with the thing that I'm using as a unit of account. And then it's like, oh, I'll just I'll put it in the numerator and the denominator, and then I'll cancel it out. So I take the current price and the 200-day moving average, and that gives me, and then I get to cancel out the dollar signs, right? And I actually did an interview with Anthem Blanchard because his father helped get gold re-legalized, and Blanchard and Company founded it. And we talked about this. It's kind of a secret decoder ring where you can cancel out the dollar sign in the equation. And so that gives me a relative price, and so if we have $10,000 Bitcoin today and the 200-day moving average is 8,200, then we have like a 1.2 Mayer multiple. Well, you can take that relative price and you can look at it over time and look at standard deviations. And so you can be like, okay, like if it's over 2.7, then it's expensive, relative, right? And if it's under like 0.6 or 0.7 or 0.8 really, then it's cheap. And if
and in between is what?
And in between is kind of fairly valued, and I like to look at like 1, 2, and 3 standard deviations on both sides and create bands. And so, good example of practically applying this because, I've started trading the derivatives. So in December of 2018, Bitcoin's at what, $4,000?
Probably lower than that, yeah.
And volatility was kind of low. Vol was low. And so on Ledger X, guess what I did?
What?
I bought 77 June 2020 5K calls at between $1,100 and $1,500 a piece.
Skirt. Want to know who has the best URL? Crypto.com. That's right, Crypto.com. They're a crypto platform with one goal, mass adoption. That's why we're all here. We're trying to get crypto in every wallet. Crypto.com is helping people do that through buying, earning, lending, and card payment. Everything you could want at Crypto.com. Go help your boy out. Tell him Pomp sent you. Download the app or visit Crypto.com. Pomp's got you, always. Ever wanted to get into mining and didn't know how? Don't worry, your boy Pomp's got you. Everybody got some electricity and Wi-Fi. All you got to do is go to coinmine.com. You buy a coin mine. It's like an Xbox or a PlayStation that helps you turn your electricity into Bitcoin. That's right. You purchase it, it shows up at your doorstep, you pull it out of the box, you plug it in, connect to your Wi-Fi, 5 minutes or less, you're mining Bitcoin. All you have to do is control it from the mobile app they provide, and then you receive over-the-air updates that add new coins and new features on a consistent basis. Kind of like how Tesla does over-the-air updates and updates the car software. Just you're updating your coin mine. Consumer mining made easy. That's right. Go to coinmine.com, tell them Pomp sent you, and thank me later.
One more word from our sponsor, BlockFi. Their new interest account allows you to securely deposit your Bitcoin or Ether at BlockFi and receive 6% annual interest paid monthly in cryptocurrency. This rate actually compounds, so you receive a 6.2% APY, which is very attractive given the alternatives. So you can actually take your Bitcoin, you can deposit it with BlockFi, and get paid an interest rate of 6% in return. Go check out blockfi.com/pomp. Again, blockfi.com/pomp to sign up and start earning interest on your crypto today.
Wait, hold on. You bought 77 calls for June 2020, so basically a year and a half out.
18 months out.
Yep. At
like
$5,000.
5K strikes.
Yep.
And I paid between $1,100 and $1,500 premium.
How's that going to turn out?
Well, they're already $5,500 in the money. And I still got like 8 months left.
Yep. Yeah.
Because I was like, this is going to be after the halvening. And so basically I'm up 3.7x in Bitcoin based on the capital that I deployed.
Mm-hmm. On top of the price appreciation of Bitcoin.
Yeah. Measured in Bitcoin,
Yep.
these options, the options are now worth 3.7x in Bitcoin of what I paid for them. Mm-hmm. Mm-hmm. So I'm actually generating significant alpha versus just holding Bitcoin itself.
Yep, for
right?
sure.
And that's before I ran into Plan B stuff.
Yep.
So like you take Plan B and stock to flow, and you take Mayor Multiple, because Mayor Multiple was very low. It was at like a 0.7, right? When I bought these call options, and then vol was low. So I'm not paying very much for the volatility premium. I get a really long time premium, and then like I have a strike that's 1K out of the money. If you're if you're at a 0.7 Mayor Multiple, you're at 4K, and the 200-day moving average is at like 5,500, and you're kind of at the bottom of the bear market, because you've looked at like these 4-year cycles and everything. Yep. You're like, how much lower can this thing go? It's like probably not much over the next 18 months, especially with a halvening thrown in there. And so boom, bought those things. I mean, I'll probably, who knows how much I'll make on those things. If we have 55K Bitcoin, whew, holy cow, that $1,500 premium is going to turn into like $50,000.
Yeah, it's pretty crazy. Well, so let's talk a little bit about the structural issues in the legacy system right now. Obviously,
repo market.
Yeah, we're recording this right now while there was a liquidity crisis driven by withdrawals, I think is the way that it's being described.
Payments.
Yeah. I think you and I probably think of it differently. Maybe just describe kind of your assessment as to what's happened and transpired, how they're trying to fix it, and what the issues are with that.
Yeah. So basically, like center of your banking system, you got next day repos, right? Like it's overnight cash, and some banks are paying 10% interest for overnight cash. Like this is crazy. Like why are you? Well, you're so leveraged and in such a bad position that you got to pay 10% interest to like not go bankrupt, I guess, or whatever.
Yeah. And we really don't have any transparency into what's going on.
Yeah, I'd sure like to know who it is.
Yeah,
so I can short them.
Yeah, and really, it's if you know that they're paying 10% on the money that they're borrowing overnight, you know that it's got to be really, really bad because that's such an egregious interest rate.
Oh, yeah. I mean, it's huge. And it's like, I mean, this is just overnight money, right? And so, I think, and so it's like $53 billion that the Fed stepped in to like goose the system with. But that wasn't enough.
That was the first.
Yeah, that was the first one. It got oversubscribed, and they're not cumulative because it's overnight, right? But then the Fed's like, oh, we'll auction $75 billion, and there was $80 billion of bids. So $5 billion of shortfall didn't get funded. I mean,
yeah, what you're basically saying is so first day $53 billion, second day $75 billion.
Yeah, and then they did 75 the next day.
Yeah, but on Wednesday, the second day of the facility or the overnight cash, basically there was $80 billion of need, only $75 billion was actually there, and so that $5 billion delta is not a good sign.
Well, yeah, that means somebody needed $5 billion of overnight cash and didn't get it.
And so what's the
I'd like to know who
impact
it is.
of that?
Well, who is it? Like, why don't we start naming some names on who didn't get their bids in the emergency line of credit, basically, from the Fed, right? And so, the implications of this are, look at Toys R Us. Great example. They were hobbling along, and then the creditors yanked their line of credit, and immediately they're in bankruptcy. That's what happens. Like, cash is king. Like, you need that liquidity, safety and liquidity, right? What's the number one killer of businesses? The number one killer is cash flow. Not necessarily that you have a profitable or unprofitable business, it's that you mismatch your cash flows. And when I did my accounting degree, my absolute favorite financial statement was the cash flow statement. Because like that's what matters, is like
tells you everything you need to know.
Tells you everything, how healthy the company is. And how much cash is it? Is it generating and able to throw off and stuff like that, or is it using a bunch of it? And so I think that this is, that what's happening in the repo markets is just very, because what happens when the banks don't have enough cash? Well, they need to start cutting lines of credit so that they can call that cash in, and so that's a source of cash instead of a use of cash for them. So they start reining in on credit that's been extended to everybody, and next thing you know, like the company that's living paycheck to paycheck doesn't have a line of credit anymore, and they go into bankruptcy. And then it starts getting fun because we have counterparty risk. Counterparty risk being that's where you're reliant on the financial ability of the counterparty to perform. And so, what happens when you've written like a massive derivative and the counterparty fails? Well, now the nominal becomes notional, which Warren Buffett described them as financial weapons of mass destruction, and so they start blowing holes in people's balance sheets. And how are the derivatives accounted for? Well, to get the bonuses, you undervalue the liabilities and you overvalue the assets. So we have a mismatch in the valuation of the derivatives on everybody's balance sheets also. So I think that might be playing a role in this, because it's like, well, I don't want to lend that bank the $5 billion that they need because, like, I don't trust how they're valuing their assets.
Well, and I guess part of this is, people will say, okay, let's agree that everything you're saying is correct in the legacy financial system. How does Bitcoin fix this, right? The kind of one of these new memes is that there is a plan B, right? Or that Bitcoin does fix this. How do you think about that, either transition or that solution entering the financial world?
Well, I mean, what's so beautiful about gold and Bitcoin is that they are equity based. They are nobody's liability. They are sovereign wealth, right? So like, you don't have to have a line of credit with anybody. You completely eliminate counterparty risk. So, that's nice that XYZ bank needs $5 billion, but I'm not going to give it to them. And I don't care if they fail. Let them fail.
Yep.
And so now, for hodlers of Bitcoin, we actually benefit from the collapse of all of these institutions. We want them to fail. We don't want them to get bailed out.
Yeah. What do you think about the ethical implications in terms of the people who get hurt if that happens?
Well, Bitcoin's been around for a decade. It's been on all the major news stuff. Like, what you doing? Being greedy, like trying to get a higher return by having money in this over-leveraged bank. That like, why were you doing that? Why didn't you put money in Bitcoin? So. Hey, that's just how the system works. The people who calculate correctly economically, they have profits and gains, and the people who calculate incorrectly, they have losses. And the people on the other side of this gulf, because there's no way to avoid the final crack up boom. There's going to be a lot of collateral damage. Just don't be part of it. And the first rule of panic is to do it first. Andreas actually talked about this when I brought up proof of keys. He's like, I'm actually worried that it might actually be successful and that people might actually withdraw all their Bitcoins. And then we might actually have failures of Bitcoin companies because, they don't have the Bitcoins that they owe everybody. And I'm like, what's wrong with that? I mean, let's mark to market all of these losses. Why are we extending and pretending? Like, I want to know who's got what and who owns what. I mean, I know what I own, because it's in my hot little hand. Prove the keys. Like, let's prove who's actually got the assets and have the value. So and
Describe what Proof of Keys is for those that don't know.
Yeah, so Proof of Keys, proofofkeys.com. It's an annual celebration, January 3rd every year. Everybody withdraws all of their Bitcoin and crypto from any third party. Just prove the keys. You're going to learn something because they're either going to send it to you or they're not. And if they don't send it to you, guess what? You just learned something. You learned that you thought you had a Bitcoin, but you couldn't actually get it in your hot little hand. And last year we had a casualty, Quadriga CX. Announced Proof of Keys. A week later, he met with his attorney to set up a will. Week after that, he died in India. A couple weeks later, Proof of Keys. A couple weeks after that, Quadriga CX goes into bankruptcy, and we have a whole bunch of people waiting in line thinking that they might get 10 cents on the dollar, if that, or Mount Gox. If they're lucky. Right? So, but the moral implications, it's not the people who have the assets at these institutions. There's no moral wrongdoing on their part saying, give it to me. The moral wrongdoing is on the person who was engaged in the fraud, and said that, we've got 10 Bitcoins when really we only have 8.
Yeah, for sure. Well, and look, you obviously have been one of the earliest investors in Bitcoin. You've been one of the most convicted investors, right? And I think you've publicly stated that you're continuing to still acquire Bitcoin today, right? This isn't a thing where you made an early investment and cross your fingers, hope it works out, and go do other things. Like, you are still actively buying derivatives, you're acquiring Bitcoin, et cetera. Maybe talk a little bit about your philosophy, just as someone who was early, but still is very active and convicted. Yeah. So,
HODL or last resort, and what else are you going to buy? I don't want to buy real estate. Buy real estate in Chicago, they're just going to jack up your property taxes. Guess what? There's no account fee for holding Bitcoin. Negative interest rates in Europe, negative interest rates on your bank account. Don't get that on Bitcoin. Property taxes going up. Don't get that on Bitcoin. Company deciding not to pay a dividend, not getting cash flow. Don't have that with Bitcoin. Bitcoin's safe, liquid. And if Plan B is right, it's like going to the freaking moon sooner than we might have thought. And then, trading the derivatives on it, Bitcoin's highly volatile. And so if you're going to be a hodler of last resort and you're going to be exposed to all this volatility, why not get paid for it? So I love selling these calls on LedgerX. And then I turn around and I take the premium from the calls and I sell puts. And I'm outside of these different Mayer multiple bands, and I actually have a pretty complex algorithm that spits out all this stuff using Plan Bs, and I'm tinkering on it and stuff too. But, at the end of the day, I'm able to either acquire a lot more USD or I end up acquiring Bitcoin because I sold the puts with the premium. And so, this becomes a way, and I'm going to be exposed to the volatility anyways. And a good example of this is, so when Bitcoin ran a few months ago to 13,800, about 13,000, I sold a bunch of August and September 20 and 25K calls. And
so wait, say that again?
I sold 20 and 25K calls, August and September. Okay. Right, when Bitcoin ran to 13K, back in July. So the price went up, so you had the delta, and then you had the increase in the volatility. And so I got a lot more on the premium. So I got anywhere from $300 to $600 premium per Bitcoin with 20K strikes, only 2 months out. And then, Bitcoin, the price came back down, to 10 grand or whatever. The volatility retreated. I either closed or had expire worthless all those calls that I sold. And I turned around and written puts. 9K and 10K puts with Bitcoin. So
you're playing a game where once you understand the market and kind of the volatility, you're able to play both sides of it and do it in a pretty risk-adjusted way.
Yeah, and what's really cool about it is there's plenty of opportunity here because some people are measuring their portfolio in USD, some people are measuring their portfolio in Bitcoin, and some people are kind of measuring it in both. Well, if you sell the covered call at 13K, your collateral has to get locked up, so it's at risk, right? So it goes from 13K to 10K. The collateral goes down 3,000 US, and I only got $500 of premium for accepting that type of downside volatility, right? But as a Bitcoin hodler, I'm just fine with it because I just want to hodl my Bitcoin and not pay taxes on a recognition event. So also these long out of the money calls, which if they get exercised, are going to exercise at like a 2.6 plus Mayer multiple. So I'm kind of fine selling at that higher Mayer multiple anyways, and then turning around and selling puts all the way down on the USD in order to reacquire the Bitcoin HODL stack.
Got it. Any crazy stories from the early days of Bitcoin?
Oh man, there's like a unlimited number of those things. How about, this was a fun one. So I was helping Charlie Shrim and Eric Voorhees plan the first Bitcoin conference in San Jose in 2013. And I paid for a bunch of expenses and stuff. And so they were supposed to reimburse me. And if you ever try to get Charlie Shrim to send you Bitcoin, it takes a little while. He understands cash is king, right? So eventually 2 or 3 weeks later, he finally sent the Bitcoins to me. But I still have those Bitcoins. And I mean, those things are like, they're a couple $1,000,000. You know, we're just talking like de minimis incidental stuff at the time, a few $1,000s of expenses, you know? So, I mean, it's just crazy, like how much fun it is too, you know, because like that first conference, been to like all the Latin American Bitcoin conferences, investments, you know, helped seed fund Kraken. But I mean, I looked at BitInstant, you know, Charlie Shrimp's thing, passed on that.
Good call. In the end.
Yeah. I was like, Charlie, you're either incompetent with your financials or you're engaged in fraud. Either way, I can't invest in you. And I don't want to pay for your criminal defense attorney, which is exactly what ended up happening, right? There was another exchange I looked at before Kraken, interviewing the CTO who didn't, I mean, all the hacker type questions just went right over his head. So passed on that one. They eventually brought on as their chief compliance officer one of the rogue Silk Road agents that's now in jail. So dodged a bullet there. You know, so it's, you know, didn't just get lucky. You know, you have to use some brain power in this area. But it's been so much fun too, because I mean we're changing the world. I mean, this is monetary sovereignty that we're bringing to people, and property rights is really what lifts us out of poverty. So if you want to help change the world and really help people live a better life and all of that stuff, I mean, you're not going to find a more powerful tool, in my opinion, than Bitcoin to do that. And so then it's just, how do you get involved with it?
I continue to say that Bitcoin's rise to prominence and success would likely do more for the world in terms of equality and kind of positive impact than all philanthropy combined, simply because it changes the structural issues that are keeping 50+% of the world's population enslaved to debt, enslaved to inflation, etc.
Yeah, you have property rights coupled with eliminating or getting rid of this economic censorship that's happened. You know, and that's the real problem we've got. You know, entrepreneurs and people in the developing countries, and even in the developed countries, they can't allocate capital in a wise way because there's been so much economic censorship by the institution of the state. And Bitcoin helps just slice through all that. And so, yeah, I mean, you're doing good for the world. You're doing good for yourself. You know, take care of yourself. Bitcoin helps you do that. Focus on your health, your wealth, your relationships, your experiences in life, like live a good life. You know, Bitcoin helps change a lot of that too, because you're shifting your time preference. And when a lot of individuals start shifting that, the culture begins to change. And then, you know, if we have a much longer time preference in our culture, you know, we're going to be tackling a lot of issues like pollution and deforestation and like all of these things that really should be solved with property rights. And we'll be able to do that. And guess who's going to have the money? It's going to be people who like had this change in time preference.
For sure. What's the one thing that you look at moving forward that would be the biggest, most important inflection point in Bitcoin's adoption or success?
I think it's going to be a lot of these large asset managers realizing that they just have to own Bitcoin. And then it's going to be crazy, like with Backed and LedgerX and these options and having to hedge it into your portfolio. Because once that starts happening, I mean, we're talking Bitcoin's like, crypto's a $200 billion market cap. Like, that's nothing.
Yeah.
I mean, we got companies with more cash on their balance sheet than Bitcoin's entire market cap.
Yep.
And there's always enough Bitcoin. It's just a matter of price.
Yep.
So people are going to have to bid that price up. And how do you bid that price up? How do you get hodlers of last resort to be selling Bitcoin? And so this is a one-by-one revolution in terms of claiming our monetary sovereignty, and people get to choose it. This isn't coercive in any way. So if you haven't chosen it, you have no one to blame but yourself.
I completely agree. What's the one thing that you think people misunderstand about Bitcoin that you want to correct?
I think they just understand the economics. They do not understand. Everybody's Keynesian. Nobody understands Austrian economics. Those that do, might have a cursory, skin deep water skiing understanding of it, like Peter Schiff, and then be warping it to serve their own self interest instead of the actual science of the economics. It's just a bunch of political dogmatists. And so, if people really understood what the soundest, hardest money that the human race has invented really means in terms of its implications, I think, we'd have a radically different world, and change would be happening so much faster. And it's already happening extremely fast.
I couldn't agree more. Last question for you. What's the most important book you've ever read?
Oh, man, that's a great one. Well, it really depends on the topic. If
you just look back at your life and you say the most important book on my life that I've read is...
I really like Heaven and Hell by Emanuel Swedenborg. He was... I ran into him because he was... massive polymath, came up with the atomic theory, the grandfather of psychoanalysis, and he was master of the mines, so he was in charge of the mining industry in Sweden. He was in the royal court, and he took time away from some of his work in order to help fix Sweden's monetary system. And so I think that just helps us understand just how important the money really is in fixing that. Because all the great polymaths have thought about this. Isaac Newton, Goethe, Swedenborg, Copernicus, Jefferson, a lot of these people. And so, I think that's probably one of the books, because, when you start shifting time preference, ultimately you're gonna get to the question of what happens after you die?
Yeah, absolutely.
And that's where you run into Swedenborg. And so, it's interesting that he took time off from that much more important thing, because running around collecting Mario coins, what difference is that going to make?
Yeah, absolutely.
But he actually took time away from that much more important work to focus on helping fix the Swedish monetary system and all the implications that would have for society. And he wrote it out in a paper. And so, I find, in terms of most important books, there's so many out there. There's Human Action, there's Money, Theory, and State, there's What Government's Done to Our Money. You got religious texts across the board that help you live a better life. You've got Bitcoin Standard. There are just so many good books that are attached. If you're working on relationships, you got Flow if you're trying to find happiness in life. What are the rules or principles for that? There's so many phenomenal books that people can read, and you are kind of the sum total of the ideas that you put into that gray matter in between your ears.
The food diet and the knowledge diet are both important. Where can people find you on the internet? Yeah,
so at Trace Mayer on Twitter. Not too active, but I stir stuff up every now and then. And then Bitcoin Knowledge Podcast, so www.bitcoin.kn. And thanks so much for having me.
Absolutely. Thank you so much for doing this. You're a legend.
Hey everyone, Pomp here. If you like this episode of Off the Chain and want to help us take crypto to the top of the Apple, Spotify, and other podcast charts, please do us a favor and rate, review, and subscribe. To review, simply go to the Off the Chain homepage, scroll down until you see the 5 blank stars. Taking 15 seconds to fill those stars in and leave a quick review goes a long way in helping us take the entire crypto ecosystem to the top of the charts. I appreciate you listening, and see you next time on Off the Chain.
Be sure to get a copy of the free Bitcoin Guide at freebitcoinguide.com. Got a question or suggestion? Record your voice at bitcoin.kn. Don't be shy. To help the show, share Bitcoin.kn with friends, post about it on Reddit, and otherwise spam the interwebs. Your iTunes comments and 5-star reviews are very important to us. Please continue tuning in to the Bitcoin Knowledge Podcast, where we release interviews with the top people in the Bitcoin world. Now take some choline and let that Bitcoin knowledge consolidate.